Hi, a very warm welcome to all of you. My name is Freddy Poonawalla, Principal Business Development and New Asset Class. We at Geo BlackRock Mutual Fund have launched our first SIF product, Prism Hybrid Long-Short Fund. We are going to spend the next 30 minutes unpacking something that's genuinely new in India markets, the SIFs or the Specialized Investment Fund, and specifically why Geo BlackRock has launched the Prism SIF at this point in time. By the end of the episode, whether you're an investor, a wealth manager, or just someone curious to know about SIFs, you'll hopefully have a very clear picture. So let's jumpstart straight into it. Let me introduce Rishi Kohli. He specializes into quantitative strategies and systematic strategies, including derivatives. He is also the CIO for Geo BlackRock Mutual Fund. So let's start from the basics, Rishi. Why SIS at this point in time? And how is it different from the other funds investors are used to of investing at this point in time? And why is the category becoming so relevant? Your views?
Sure, thanks, Freddie. So SIF is Specialized Investment Fund, as you just mentioned, and SEBI introduced this category last year. The aim was that there are these categories of PMS, AIF, which are for HNIs and more sophisticated investors, but they have minimum ticket sizes of 50 lakhs for PMS and 1 crore for AIF. For SIF, SEBI's brought this for 10 lakh minimum ticket sizes. So the idea was that more sophisticated strategies can come in because SEBI is allowing some long short strategies, some derivative strategies to be used as well. So more complex strategies can be brought in, more types of strategies across the risk return spectrum can be brought in, and the ticket sizes will be lower than the PMS AIF. So it was sort of to bridge the gap that was there from a structure and a ticket size and a type of strategies perspective. Then coming to why there is excitement, I think there are two categories of people. So one is of course the very large family offices, ultra HNIs, people who are already doing some long short strategies via the AIF Cat 3 funds because their leverage was allowed. They were long short, both absolute return and more equity long short strategies. So I think those set of investors, advisors, distributors already had a background on these strategies and have seen good and bad some market cycles on them. So for those categories of investors and advisors and distributors, SIF becomes a natural fit and has similar kind of long short and derivative strategies. This is a much easier vehicle for them also from an operational and tax perspective. Especially the tax greater than 1 year becomes long-term capital gains taxation. So in those kind of funds, you're getting fixed income plus returns, but a better taxation.
Right.
So it becomes interesting. For equity long short and other categories, it can be very different. And then of course, SEBI has many different categories. Like I mentioned hybrid, I mentioned equity long short, but there are asset allocator long short, sector rotation long short. So there can be many different types of strategies, which relates to the different risk return spectrums that I was talking about. So there is this one class which already understands a little bit and there's a natural demand. The other is the 10 lakh ticket size to 1 crore, right? Because earlier only 1 crore guys could do it. So that 10 lakh to 1 crore, also a lot of section of investors has got more sophisticated, more aware, understands what is happening globally, and wants such products as well, where a little more sophistication is there. It's not plain vanilla long equities or fixed income. So that channel also gets a good avenue to come in and test these strategies. That is why I think there is a lot of excitement between both these groups for the SIFs overall.
No, absolutely. I think Rishi, thank you. This is very well put across as we speak. I think differentiated strategies, bridging the gap between PMS, AIF, and mutual funds, tax efficient structure. I believe this is exactly what SIFs are designed to do. Thank you for the coverage for that. Now, within the SIF space, Rishi, why do you think that hybrid strategies have picked up a lot of momentum at this point in time? Why? What are your views around that space?
So one reason is I just mentioned about AIF Cat 3. Now within that, there were in the long short space absolute return strategies that were there, which were trying to with very low risk get consistent returns. And then there were more equity long short, which was equity plus equity minus kind of strategies in terms of return objectives. Within that, the absolute return category was what was a little more consistent, a little more appealing to a lot of people. And therefore, that had grown a little bit. And as I said earlier, that, there is one class which is coming after that experience. So I think that class of investors, distributors, advisors already had that gap, because even in AIF Cat 3 absolute return category, then it becomes very appealing, because that is what is largely missing in everyone's portfolios in India right now. So because of that, I think hybrid has naturally taken a lead. And as we know, the overall SIF industry AUM is touching around 14,000 crores now, and around 72% of that is hybrid. So even our view at Jio BlackRock was that hybrid is more interesting to begin with, at least. And I think the growth in that industry is sort of confirming what we had thought about due to these reasons.
So basically, Rishi, you're saying is that more consistent, predictable, fixed income plus sort of a return trajectory is attracting a larger segment of the investors in this particular segment. So,
and that is for the current set of investors, and who are immediately coming in. I think over a long period of time, there's another unlock, which is the big money sitting in FDs, which is the biggest pool of capital in India as such, which has not got unlocked at all and not come into capital markets. Right. I think this category also has the potential to unlock a lot of that, which is also part of the excitement.
Perfect. No, I think this is good unlock. Why gives us a lot of clear picture in terms of why hybrids are booming at this point in time. Now, why did you choose, or rather, why did Jio BlackRock choose the hybrid vehicle to launch the first Prism SIF?
Yes, so we thought of hybrid because of a couple of the things I already sort of touched upon. That even in our analysis, it was clear that a lot of demand will be there for a hybrid strategy which can target absolute returns. Secondly, the team, right? So there is a strong team across equity and fixed income with experience of very differentiated strategies. Like some people in the team have experience on derivative strategies that we are trying to implement in the fund. Then there are others who have experience on fixed income and REITs and which other strategies which also we are using in the fund. So I think interestingly, and we are blessed that we have that kind of diversified team with diversified experiences on these diversified strategies, which all come together beautifully into a hybrid kind of structure. And therefore, it became easier for us to plan something on the hybrid side.
In fact, I also remember, Rishi, we were doing some roadshows initially, and we did go to market and we spoke to a couple of institutions and family offices, and I believe the whole structuring was done basis that, plus plugging in the entire expertise as you mentioned. No, I think fair.
And that also is important because from a key man risk, right, which a lot of people, forget. I mean, everyone knows it's almost the most important thing, but people do forget. And in our case, there are lots of people in the team, who can manage. There is obviously one key fund manager, but then there are many others who are co-fund managers and backup, even on the junior side, both senior, junior side, there are enough people. So we are not dependent on one person. There are many people. And secondly, of course, there's a process. We are quantitative and systematic, so everything is being implemented systematically, which also means that the process is more robust and more scalable and is not over-dependent on one or two people.
Absolutely.
Which I think is a big differentiation in the industry.
Also, Rishi, I wanted your views on the BlackRock expertise and the platform Aladdin, which a lot of people know about and a lot of people want to know about. If you can spend maybe 1 or 2 more minutes on, decoding Aladdin and how it helps us in this process.
Sure. So Aladdin, firstly, for everyone who hasn't heard me say this earlier, is an end-to-end integrated platform. Firstly, it is not a magic model that suddenly starts spewing out the best trades for any strategy that you have, but it makes things very, very efficient and very seamless. So it is an end-to-end integrated platform where, from data being on it to whatever models we want to plug into it being on it, to the portfolio getting generated, the trades getting generated for the traders, going to the brokers, getting executed, the fills coming back and getting uploaded in the back office systems, and then going to the custodian, and also risk compliance, pre-trade, post-trade checks happening. So all of that can seamlessly happen in that one platform. Right. And different people in different departments who need to cross-check or do various jobs related to the various parts of the process that I mentioned, they can get access to only their modules while the overall platform is still being used is very common. So it makes things very efficient, very fast, and therefore reduces, time and cost for us, which is what a little bit of the cost we like to, and try to pass to investors in terms of the overall fee, etc. So that is its, most biggest value add. And then, of course, certain data, certain models that are already there because of past work done are things that you can seamlessly use in other new strategies that you launch. So that from that angle, it becomes very scalable in the long run. And then any new modules, models, any new ideas that the team has, those can easily be plugged into this whole setup. So these are the various ways in which Aladdin really helps us.
So basically, to summarize, Rishi, efficiency, sort of cost benefit and risk management done extensively on the platform.
And risk management, most importantly, especially for SIFs, because there are long short strategies, there are derivative strategies, but I think it'll all boil down to who manages the risk best. Because like we have a philosophy of tail risk management very, very tightly,
Right.
and for that again, Aladdin, you can actually use it to see whether risk is not rising, various correlations that we're trying to keep low across different strategies that is not rising. Those sorts of analysis can be done on a real-time basis on Aladdin.
Thank you. This is insightful. Thank you so much for your insights.
Thank you.
I would now want to call upon Arun Ramachandran, who is the CIO for SIF, Prism Hybrid Long-Short Fund, and also is our co-head for fixed income Geo BlackRock Mutual Fund. Let me give a warm welcome to Arun. A warm welcome to you, Arun.
Thank you.
Yeah. Now let's deep dive into the Prism Hybrid Long-Short strategy. What is the objective of the strategy as per you?
So the objective is to provide an investment avenue for an investor which sits between the traditional arbitrage fund and active equity fund. So it's kind of an absolute return strategy.
Interesting. So arbitrage plus tax efficient structure and an absolute return strategy. Moving on, decoding the strategy. I believe there are 4 different sleeves or a multi-strategy approach Prism Hybrid Long-Short has adopted in its endeavor to deliver returns in a risk-adjusted way. Can you walk us through these 4 strategies?
Yeah, so eventually when you look at our portfolio, you will see that the entire investment are segmented into 4 strategies which we call as sleeves. The core of it, which will be, is something we call as collar strategy. Now collar strategy is nothing but we do a covered call, but to minimize market risk on the covered call strategy, we go ahead and we buy put to minimize the market risk on that particular covered call strategy. So that will be one of the core strategies. Then the next would be what we call as merger up.
So basically, you're protecting the downside risk by buying puts, right?
Yeah, in a covered call strategy, you are always going to be exposed to market share prices of the underlying stock. Now, if you buy a protective put against it, you minimize exposure to those volatilities for the investor. That's why we are doing collars and not a covered call strategy in this.
Interesting.
And the next strategy which we would have is something which we called as merger arbitrage opportunities. Now this again is a long gestation strategy for us. Now merger arb, if you ask me, is nothing but if A company is going to acquire company B, and once the swap ratio is announced, which generally happens once all the approvals are in place, what we do is we go ahead and we buy the stocks of company B, which is the company target company, and we go and short the acquirer company. And over the course of the merger, it might take 9 months to 12 months to materialize. Depending on the swap ratio, the prices will converge. And generally, we've seen very attractive return proposition of something of this in nature, which again is opportunistic depending on the mergers in the market at a given point in time. But this again would be part of our core strategy.
Interesting.
The next sleeve which we have is something which we called as hybrid, which comprises both REITs as well as InvITs. Now REITs and InvITs have gained relevance over the last 4 to 5 years as something which is part of any portfolio allocation for an investor, because we've seen very good opportunities in REITs and InvITs over the last 4 years with very attractive returns. So this will be core for our strategy again, and this is nothing but what we are focusing on, a high dividend paying kind of an exposure to meet our expectation from the fund.
So basically, a yield play is what you're targeting in this sleeve for REITs and InvITs.
Yes.
And I believe off lately there are a lot of private REITs and InvITs now becoming public, so that gives you more liquidity or more opportunity to participate.
Yes, currently the challenge with REIT and InvIT exposure is liquidity. But given the significance this market has gained over the last 4 to 5 years, we expect a lot more private and REITs and InvITs to get into the public space, and that will open the door for more opportunities and more liquidity.
Interesting.
The final sleeve which we have will be the fixed income stream. Now here again our focus is going to be on debt exposure, which is going to be minimum 25% of the portfolio, because that's what is mandated by SEBI in the hybrid long short fund. And the focus, as I said, is going to be reduce risk as far as possible by concentrating on highly liquid and very high quality government securities and debt.
Interesting. So to summarize the sleeves, as you mentioned, collars, merger arbitrage, REITs and InvITs, and fixed income, good quality fixed income.
Yes.
Fantastic. Now, Arun, my next question to you is, can this be a part of all investors' portfolio? What are your views on this?
Yes, I think it should be a part of an investor's portfolio. This gives you that tax efficient investment avenue. For someone who understands equity market risk, this is an excellent avenue to become part of his portfolio, his or her portfolio.
Interesting. And what time horizon should somebody come into? If an investor wants to come into, what time horizon do you think they should envisage in their mind before they invest?
Okay, one, definitely from a tax perspective, more than 1 year makes immense sense, because that's when it becomes tax efficient for an investor.
Absolutely.
But even otherwise, given that a lot of the underlying strategies which we have in our fund, which could be the REIT, InvIT sleeve, the merger of opportunities, which I said could take 9 months to 12 months to materialize, investment horizon has to be more than 1 year.
And also, since this is arbitrage plus, and arbitrage typically sits at 6 months time horizon, this can be a 12 month sort of a time horizon is what you're envisaging to the investors who come in.
Yeah, definitely more than 12 months
Sure.
is something which we would recommend any investor who's intending to take exposure to these funds.
Interesting. No, I think this has been very, very insightful, Arun. Thank you so much for your time, and I'm sure our viewers would have had a very interesting time listening to how we've structured the whole Prism Hybrid Long-Short Fund. We are very, very excited to let our viewers know that we are already live with the NFO. The NFO closes on 13th of July 2026. Please do evaluate the strategy. Please speak to advisors, and if you feel merit, we would be excited to have you participating in the new fund offering. Thank you. If there's one takeaway from today's conversation, it's that investing doesn't have to be a choice between seeking returns and managing risk. You can potentially pursue both. In today's dynamic market environment, strategies that can adapt to changing conditions are becoming increasingly relevant. And with the NFO closing on 13th of July, now is an ideal time to evaluate how it could fit into your investment journey. Thank you.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.